Yes, my dear. See, as we planned, now let us. Yeah, so let's have a discussion about Ind AS 8. That very quick revision. I'll not take too much time. At the same time, we'll get into um, the MCQs as usual. Right. See, Ind AS 8. Ind AS 8 talks about three topics. One is accounting policies, change in accounting estimations, and errors. Okay, right. So the first one is accounting policy. With respect to accounting policy, what it talks, what is an accounting policy? Right. At the same time, what is the hierarchy in which the company should select? At the same time, if there is a change in accounting policy, what are we supposed to do? And some of the circumstances which are not amounted to a change in accounting policy. Okay, right. That is the point. At the same time, change in accounting estimation, which is a very simple concept. Change in estimation, yes, you must have made some estimation that if it is undergoing a change, how are you supposed to account for the same? That will speak. And the third discussion is what errors. Yeah, change in estimation is obviously prospective. We'll discuss a little more about errors. Errors, how are we supposed to do? That is, I mean, errors in the sense like earlier we used to use the word prior period error, but accounting standard 5 prior period error talks about only which is affecting the profit and loss only. But as per Ind AS 8, it is not affecting only profit and loss. It may be affecting only balance sheet also. Still, you are supposed to follow this. Okay, let me take you through the little bit of yeah, this standard. Yeah, this is my book, which is a summary book actually, the chart book. That if you wish, you can take it. Okay, and this is going to be released maybe very soon. Yeah, not yet released as of now. Okay, right. Maybe in a 10 days time or less than a week, it's going to be released. It will be available in the market and it will be available in my website as well. So what is an accounting policy? Accounting policies are basic thing. There is a principles, rules, conventions, practices, whatever is adopted by the company while preparing the financial statements. Yeah. So what is the areas? In areas, in the sense, it is there in the measurement. Measurement may also accounting policies are there. Classification also accounting policies are there. Disclosures also accounting policies are there. Valuation may also accounting policies are there, which is very clearly given. When I say it's a valuation, like whether you should follow FIFO method, LIFO method, that is also yes, it's a policy choice. Correct, na? Right? Which is a measurement. Correct. Now I want to measure at cost or I want to measure at revaluation model. Yes, there is a choice. Some of under Ind AS 109 timing also is going to be a right timing of recognition. What is timing of recognition, sir? Yes, in timing of recognition also, my dear, whether to account it at the time of trading, I mean purchasing the share, or whether at the time of settlement. Trading accounting, trade date accounting, or settlement date accounting. Yes, two concepts are there. Out of this, which day you wanted to account for? That is a choice which is given to you as per Ind AS 109. Right. So this obviously management is going to select it. There is a selection criteria or hierarchy, I would like to say, the priority basically. What is the priority? The first, if there is an Ind AS information, I mean to say Ind AS has given this, Ind AS has given this is these are the two choices only, which one you want to follow it. Then there is no other option for you. You are supposed to follow whatever is mentioned in the Ind AS. Okay, right. So, sir, on the subject, on the matter, exactly Ind AS guidance is not there, sir. Maybe not there, I agree. Under that circumstance, you have to look at the similar or related issues. How is the Ind AS guidance? Accordingly, you should go ahead with. So there is no similar issues, nothing is there. Correct now, with which I should refer it. Oh, is it? Then it is immediately the second concept. What is it giving? You should go by the definition and recognition criteria of the asset, liability, income, expenditure, and equity. So you are supposed to go by the basic principle which I discussed like in the day one of my discussion. Obviously, if you don't know what is asset, when to record it, what is liability, when to record it, if you don't know what is an expenditure or what is an income, correct. Now learning the entire standards, it will be useless basically. Correct. Now the fundamentals you are supposed to strengthen. That if it is not that correct, now that great, then it is basically you are wasting your time. Done. So that's what the second point itself they say definition and recognition criteria of the asset liability in equity income expenditure only you are supposed to follow. And the third one is recent amendment or recent pronouncements of IAS, I mean IASB or ASB, if there is any on that. Okay, go ahead with. right? So that is also not there. Then other similar gaps like US gap, or US gap also okay, because that is also which is nearer to IFRS, but still there are so many differences are there, more than AS and Ind AS. Still differences of US gap is huge actually, but fine. Other similar gaps, I mean, in principle both IFRS or US gap are similar, no, that kind of gaps you can follow if you find some clarity. Okay. Sir, can I change an accounting policy? Yes, you learned it in CIPCC itself. Yes, you can change an accounting policy. We don't have any question on that. Correct. When can you change? When it is required by the Ind AS? Yes, Ind AS itself is modified. Yes, you are supposed to change it. Or if you feel that that will lead to a better presentation, then also you can change the accounting policy. Okay. Right. Adoption of a correct. This adoption of a new policy. Adoption of a new policy. I mean, so far there is correct. Say examples are my number of employees are number of employees in the company are hardly less than 10, or less than 10 people are there, so gratuity act only not applicable, so that's why we did not write so far gratuity accounting policy. Not a problem. Now we crossed more than 10 and gratuity act is applicable, that's why we wanted to correct. Now we took it to actually that this correct. Now I'm writing it's an adoption of new policy. Last year it was not there applicable to you. This doesn't amount to change means what? You have something, you're removing it and you're bringing a new one. This is amounting change. Sir, kuch khali, nothing is there, now I brought something. This doesn't amount to change in accounting policy. Okay, right. And again, adoption of a new policy for substantially new events and new circumstances. Yeah, this was there was one small actually one what do you call? I'll tell you. This was discussed in one of the ASB meeting which I attended, accounting standards meeting. May I mean on some concept basically. Okay, because I am also a teacher for the members in India's program. India's what is the certification program? I'm a regular faculty. Every batch I will be teaching either one class or two classes on every. I mean every time. So now the question is what? In that one question has come. See, the company has made one policy. What is the policy? If the assets, okay, individually asset value is equal to 50,000 rupees or less than 50,000 rupees, we will write it off 100%. 50,000 is a small number for that company. That's why fine. So they continued like in the last year. They have continued in the same fashion. They have charged off all those things. But now in the current year, what has happened, the 50,000 wala, if you add it, no, how much are you charging is coming to crores together. So now they felt yes, or last year it was suitable, it is correct, but current year it is not it is not suitable. That's why what decided, no, 50,000 rupees, I don't want to charge it of 50,000 rupees, because in aggregate it is coming to more than 50,000 rupees. You got my point? Yeah. So now what should I do? Is it a change in accounting policy? Last year you followed one policy. Is it current year you followed another policy? No, my dear. That's why standard is very clear. Adoption of a policy, because, correct. Now, adoption of a policy, you are changing a policy because the last year circumstances are substantially different in the current year. So under that circumstances, it is not a change in accounting policy. Yes, one of the yes, if you follow me in LinkedIn, I have given one good example, and I have given explanation for such kind of situation. If you get some time, just have a look at it. That will be helpful to you. Okay, right. Accounting. How are you supposed to do accounting if there is a change in accounting policy? See, generally, when there is a change, there are two regions. There is a change. One is as per the Ind AS change. Correct, na? Right. If there is a as per Ind AS change, then Ind AS only will tell very clearly how are you supposed to correct. Na? Change should be accounted for. I mean, transitional paragraphs will be given below the Ind AS. So just you need to follow that. So Ind AS mean nothing is given. If nothing is given, you don't have any option. You are supposed to go by the retrospective application. Sir, what do you mean by retrospective application? Correct. Now, what do you mean by retrospective application? Yeah, as if you have followed the same policy in the beginning. I mean, like long ago. And always remember, whenever there is a change in accounting policy, whenever there is a prior period error, whenever there is a change in classification, you are supposed to give a third balance sheet. Correct. Now, you are supposed to give, what are you supposed to give, my dear? A third balance sheet is mandatory. What is third balance sheet? That is the balance sheet of, I mean, balances of the beginning of the previous year. You are supposed to provide mandatorily. Okay, right. Sir, this is not, I'm changing the accounting policy not because Ind AS is saying, that is because for the better presentation we wanted to change it. Yes, welcome, you change it. Then under that circumstance, you don't have any choice other than retrospective application only you are supposed to do it. Right. If you say periodic specific effect, I mean, I don't know the effect of previous year. I don't know effect of that previous year. I don't know exactly. Okay. If you don't know that specifically, yeah, if you don't know that specifically, what are we supposed to do, sir? Yeah, what are we don't know that specifically what are we supposed to do. Suppose if I don't know last year impact exactly, correct, now I can't give the impact in the current year. Instead of giving it in the current year, what you should do, adjust it at the beginning of the current year. Okay, year specific if you don't know, correct. Anyhow, this concept was very clearly discussed in the main class. Right, cumulative effect means you change. Suppose you some policy you are following from 2011, right now 2020-24, correct na? So what is the effect of 2011 to 24? I don't know. Cumulative effect, I don't know. But okay, fine. Now the next question is, what, from which year you know? Sir, I know the impact from 2018 to 24, I know. Fine. So at least from the year from which it is possible, from that year you please start following it. That is the simple answer. Correct. So if you change an accounting policy, what are you supposed to do? That is a simple thing. Right, disclosures, you obviously a lot of disclosures will be there that you are supposed to do. Change in accounting estimation. Estimation is something where you don't have a precise, I mean, exact way how to do it. That's where you do the follow the accounting estimation. So provision for doubtful debts, fair market valuation, correct. Now provision for variant, all provisions, valuations, everything is obviously this one. Correct, estimations. So when you're doing estimation, that itself you know that you are going to it is going to undergo some change in the future. That's why. So fine. So if there is a change in the estimation, what are you supposed to do? Very simple, prospective application you are supposed to follow. What do you mean by prospective application? Correct. Now whatever happened in the past is just forget about it. Right. So whatever situation right now, from now onwards, without considering the past, forget about the past. From today onwards, whatever you are supposed to do. Right. Change in the life, change in the valuation method, and many other things are obviously part and parcel of this. So suppose if it is with respect to PPE, correct, now your change in the life is happening. Whatever you have depreciated so far, don't reverse anything. What is the book value today? That is supposed to be depreciated over the remaining life of the asset. That's all you are supposed to do. Right. And the next point is errors. Sorry, errors are either mathematical error, errors are fraud, errors are wrong interpretation of facts. Yesterday also, if you remember, we discussed like in India is 10. Error includes fraud. Yes, it is there very clearly definition. When do you say it's an error? It is an either omission or it's maybe misstatement. Okay, sir, I forgot, sir. No, one more point is there, which is there in one of the sums which we have discussed in the classroom. if you had if you had put reasonable effort, got my point? If you had put reasonable effort, if you had put reasonable effort, you would have done that job in the last time. You would have done the estimation properly. You would have done estimation properly, but you did not spend correct time. You did not spend correctly. I mean, you did not apply your brain that time. That's why the error is coming. That's why the difference is coming. That also amounts to error. Okay, if you had put reasonable effort to find out and you did not put it, that also amounts to error. Sir, if it is an error, what are we supposed to do? Nothing, doing simple. You are supposed to retrospectively restate the financial statements. So retrospectively restate in the sense as if error did not happen. If error is related to last year, then go and change the numbers of previous year. If error is related to last year's, current, before previous year, then you are supposed to adjust in the opening balance sheet itself. You are supposed to adjust it. It may be having impact on asset or liability, and obviously the remaining amount will be impacted in the retained earnings. Okay, that is how it is going to happen. Fine. The summary of yeah, so summary, I mean, this is the summary of the important questions and etc I have given. Chalo, this is about the quick discussion, quick revision of Ind AS 8. Chalo, now as usual, let's get into our Ind AS 8 accounting policy changes in estimations and etc. Yeah, so there are so many questions. As I told you, I have taken MCQ questions of ICA. I have taken some additional questions today also. I couldn't filter which are all repeated. It may be repeated, but fine, not a problem. We'll identify the repeated ones, and when I am sharing the file to you, that time I'll delete the repeated ones and I'll give it to you the final version. Okay, chalo guys. and participate with your answers. That will be very much helpful. Correct now, right? Whether you are really catching, not catching, correct now, that is more and more important. Yeah. What does it says, my dear? Applying a new accounting policy to the transaction, other events or conditions, as if that policy had always been applied, is considered as. Tell me, is it called retrospective? Is it called prospective? What is it called? Yeah. B. Correct. Now, retrospective application. Yes, without doubt. Retrospective application. Which of the following items are examples of change in accounting estimation? Yes, answer me. Change in a, which are the things are change in estimation? Yeah. Loss allowance for the expected credit loss. Applying Ind AS 109 financial instrument. Net eligible value. Okay, that is a next eligible value change. It's saying the depreciation expense for the items of property, plant and equipment as per Ind AS 16. Provision for warranty. Right. See, all the things are there in C. A, B, and selective things are there. Yes, look at it. Hmm. First one is provision for doubtful debts. A loss of allowance. Loss allowance is nothing but provision for doubtful debts. That's all. Yes, guys, answer. Exactly. All the things are actually one, 2, 3, 4. All the things are one, 2, 3, 4. All are estimations only. Exactly. It is estimations. Correct. Na? Provision for doubtful debts is an estimation. NRV is what is expected to come in the future. How do I know? Correct. Na? So that's why NRV calculation, bringing it to NRV, it's not the fact. Today I have the inventory in my hand. At what rate it will be sold, at what amount it will be realized, that also I don't know exactly. Okay, depreciation, depreciation is an estimation without doubt. Yes. A provision for warranty is also estimation. Correct, na? Right. So that's why your C bit answered whatever you did. I mean, answered Chetana. That is perfect. Yes. Let's look at the third bit. A company made some changes. A company made some changes in the accounting policies accounted for those in the financial year 2001 and 2, that is 21-22. Due to change in accounting policy, retrospective adjustment has the tax effect related into the previous year. Yes, along with the effect on the transaction. How will this be accounted for and disclosed? Tell me, my dear, what are we supposed to do? Due to change in accounting policy, retrospective adjustment has a tax impact also. Yes, tax impact related to the previous years. Yeah, correct. So how do we show this impact? Is it as per Ind AS 8 or is it as per Ind AS 12? Tax effect in accordance with the Ind AS 12 and transaction effect is with respect to Ind AS 8. Entity has a choice between A and B. Mhm. Yeah. See, tax related thing. That's why Ind AS 8 says very clearly. If you read the scope or correct, now tax related things you are supposed to refer Ind AS 12. Correct? They only say. If you read the information, whatever, I mean, read the text once again. Tax effect of the previous, I mean, restatement and etc. has to be dealt as per the Ind AS 12, not as per Ind AS 8. So transaction effect is supposed to be done by Ind AS 8. It is mentioned in the standard. It is not created by me now. It is discussed and maybe not discussed very deeply, but yes, since it is a matter of MCQ, you have to be very careful with every word. So here I would like to say that is C bit is the correct answer, which is mentioned very very clearly, which is there in your textbook as well. Okay, right. Fourth, in some cases it is difficult to distinguish between a change in estimation or change in accounting policy. We had a discussion on this. How do you treat this, my dear? Read it and get me. I don't know. I'm in confusion mode whether it is a change in accounting policy or change in accounting. Got it? Yeah. So what are we supposed to do now? Is it a change in estimation or not? Yes. You are supposed to consider entirely as a change in estimation. Correct na? Yes, that is what we have discussed very clearly. Yes, in the class also, main class. Correct na? Right. Next, go to the fifth one. Which of the following, correct na? Which of the following shall be considered as a change in accounting policy? Shall be considered as a change in accounting policy. Yes, read through the answers, please. The application of accounting policy for the transactions, correct na, transactions, other events and conditions that differ in substance from the previous year occurring. I told you just now, if the application of accounting policy for a new events or something, na, no, I mean substantially different events, you are not supposed to consider it as a change in policy. Application of an adoption of a new policy, no. That's why yes, you are right, my dear. That is D. None of these things are change in accounting policy, which we spoke just a few minutes before as part of the summary. Correct. And the sixth one. Okay, which of the following is treated as a change in accounting policy in accordance with Ind AS 8? Accounting policy name, that is Ind AS 8 name is given. So tell me, my dear, change in composition of reportable segments. Okay, change in composition of reportable segment. Is it a change in policy? It's a disclosure here. What is there? Correct, na? It is not accounting policy. Next, change in functional currency. That is not your decision. I told you in the classroom itself. It's very clearly discussed. Change in policy means change. There is a choice change. With respect to functional currency as per Ind AS 21, what do we say? This is the currency of the primary economic environment. Economic environment is not your choice. That is economic environment based on the influence of the sales and purchases and other expenses which you are supposed to, which you are supposed to decide it, conclude it. But there is no choice for you. So it won't amount. Change in the classification of financial asset. Mm, no, classification depends upon the nature of the asset. You have to look at accordingly. You are supposed to classify. That doesn't amount. Change in the measurement method of inventory. Yes, it is. Correct, na? Right. Method of inventory means it is either I am going by FIFO method or weighted average method or standard cost method or simple average method or some other method. Yes. So that's why the D answer is going to be the correct answer. Hope you got it. Right. Look at the seventh bit, my dear. The selection and application of accounting policies for the similar transaction, other events and conditions shall be. Right. Tell me, selection of application of accounting policies. Read through ABCD and try to answer. What do you feel? Correct. Yeah, selection application of accounting policy should be correct now, consistent unless in day specifically require, correct now, consistent always. See, consistent always normal sentence. Okay, consistent always is a normal sentence. And now read the next lines also. Let's read everything. Consistent unless Ind AS specifically require or permit categorization of items which different policies may be appropriate. Yes, obviously this is always welcome point. Correct. If any specifically Ind AS says that you can follow differently, yes, you are supposed to follow differently. Consistent only if Ind AS specifically requires, nothing like that. Consistent unless the policy is not favorable to the entity. There is nothing related to favorable unfavorable matter here. So that's why B is going to be, as you rightly said, B is the right answer. Okay, right. Eighth bit. Let's have a look at. According to Ind AS 8, when a change in accounting policy is applied, when there is a change in accounting policy applied retrospectively, the entity shall adjust. Tell me, retrospectively, what are we supposed to adjust? Read through. Opening balance of each affected component of equity for the earliest prior period presented. Other comparative amounts disclosed for the earlier period presented. Other comparative amount disclosed for each prior period presented. Opening balance of the each affected component of equity for the each period presented. State with the above, which are all correct. Go through. I think you need to read it carefully once again. Otherwise, you can't answer so straight. change in accounting policy. When a change in accounting policy are applied retrospectively, the entity shall adjust. What are you supposed to adjust? You are supposed to adjust the other comparative amounts disclosed for the earlier prior periods presented. Yeah, this is the first important. Not just the prior. I mean, what am I saying? Amounts disclosed for the earliest period presented. Can you try to second bit? I feel it's more relevant rather than the. I mean first and third. One second. Okay, sorry. Oh, here I have to club it, na. Okay, one second. Opening balance of each affected component of the equity for the earliest period presented. Yeah, I'll tell you practically what are we supposed to do whenever there is a change in accounting policy. In the SOCIE, okay, statement of changes in equity. How do you do? Let us say current year is equal to 2023-24 current year. Okay. So as I told you, you are supposed to give the information. Say example, this is retained earnings or this is some revaluation reserve, some other reserve basically. Just think like that. How do you start, my dear? Opening balance. Opening balance of which date? That is 1/4/2022 will write. Okay. Say some 1,000 rupees I will write here, 500 rupees I will write here. What are you supposed to do? Now you are supposed to plus or minus change due to retrospective impact of change in accounting policy, something policy change. You are supposed to write. Sir, some 50 rupees, sir. Here 10 rupees, sir. Example, I am saying. This is 1,050 rupees. This is 510. This is the revised amount. Okay. Revised amount. Right. Revised amount as on which date? As on 1/4/2022. Yeah, sir. What are these numbers? These numbers are taken from the previous year. Correct, na? Previous year you must have presented already. Yes, yes. 2022 May you must have given some numbers. No, our numbers you are supposed to take as it is. Then you have to disclose it in the SOCIE. SOCIE you call that is statement of changes in equity. Like this plus or minus changes. Changes due to retrospective application of accounting policy, something like that you have to mention, and you have to give the effect. Then you should say this is the revised amount as on 1/4/22. Yeah, because this is nothing but this is the impact of all the previous years. This impact of not the current year, my dear, because impact of 2022-23 will go to 2022-23. Impact of 2023-24 will go to 23-24 P&L 20 correct respective reserve. So impact which is related to prior years supposed to be disclosed in this fashion. Okay, I'll come back now. Read the answer once again. So the opening balance of each affected component of equity for the earliest prior period presented. Yes, you are supposed to disclose. That is mandatorily. Next, third bit I feel correct. Other comparative amounts disclosed. For the other comparative amounts disclosed for the each prior period presented. Yeah, it is not earliest prior period presented. See the second bit, why am I saying not correct? Second bit, this is not correct. This is earliest prior period, not earliest prior period. Why like the difference? Example, generally in India, what do you do? Current year you will disclose, previous year you will disclose. Correct, now? Does accounting standard or Ind AS says that no, you should disclose only for two? No, go to Ind AS 1. Ind AS 1 says minimum of two balance sheet, 2 years. But they will not say, I want to give, sir, 4 columns, I want to give. Give your paper, your pen, what is my problem? Correct, na? Sir, previous year 1, previous year 2, previous year 3. Suppose you gave some, so 4 columns you gave it. Yes, if you give 4 columns, you have to go and adjust it in all the 4 columns. You don't have a choice for what? Correct. Earliest prior period only. Earliest prior period means he's saying adjust it only in the previous year 1, which is not correct. That's why second is obviously not correct. This is correct. Earlier correct. Each prior period presented. What are you presenting? I am presenting all three, sir. All the three you are supposed to give the effect. Next, opening balance of component of the each prior period presented. Opening balance of each affected component of equity. Each affected component of equity. Okay, for the earliest prior period presented. Yes. So I mean to say this is with respect to equity, earliest prior period is sufficient. But with respect to this is fine. So my answer is going to be B, that is 1 and 3. Okay, 1 and 3. Yeah, chalo. Let's go to the next question. So what is the ninth bit? Ninth bit, some new standards and amendments have been issued in the month of March 2022. Example 2022. But it was effective from the 1st April 2022 itself. Okay, that is next year. Done. So in accordance with Ind AS, what is the provision in this regard when the entity has not applied a new Ind AS and has been issued but not it effective? Yes, correct. No? See, I am preparing financial statement. You in this question you are supposed to assume you are preparing the financial statement for March 2022, means 21-22 you are preparing. Your year, what is your year, my dear? Your year is equal to 21-22. Correct. On March 22 it has come. It is applicable from 1/4/22, means that is 22-23. That is the previous. I mean next year may it is going to be applied, but it is not effective for the current year of balance sheet. Are you supposed to disclose this? Mandatorily you are supposed to disclose as per Ind AS 8. Mandatorily you are supposed to disclose. Then what are you supposed to disclose? Look at this, my dear. Treated as a change in accounting policy. Sorry, my dear, it is not a change in accounting policy. Only disclosure in the facts are required. Yes, disclosure is required. But what exactly that? I mean, just hold on. I'm just keeping the B alive, but I need to read C and D. Then only I'll come back. Disclose both this fact and yes, you have to tell both the fact. What is the fact? Yes, so and so. I mean, so and so standard is coming out. Correct. Na? This is what the amendment has happened, and what is the impact on the impact? You have to write. What is the impact on the my financial statement for the next year? That also you are supposed to give it. Read that, my dear. Disclose both this fact and any known or reasonably estimated information relevant to the assessing the possible impact, yes, that application of the new Ind AS will have on the entity financial statement. This is more correct. Still I read the fourth one. Discussion both the facts and any known or reasonably estimated information relevant to the assessing the possible impact that application of the new index will have on the entity financial information in the current period. It is not on the current period actually. This is what is going to be what is going to be have impact in the future. My, like say example, there is an amendment in the leases. Then you have to tell as per there is a amendment, right? So and so amendment has come in the March 2022. Correct. Now this amendment is with respect to Ind AS 116. These are the small lines. You just need to summarize the amendment in simple format. Because of this, what will be impact there? Correct. Na? Right. What will be your impact on the financial statements? On the financial statements that you are supposed to tell. That's all. Not related to specific current period or last year. Nothing like that. So my answer is not B. B is very slight. Okay, this just disclosure of the fact. No, impact also is correct. This is just disclosure of the fact, and impact is necessary. But anyhow, that all the information is very clearly given in C. That's why we should be voting it for C. Okay. Next, according to Ind AS 8, prior period errors shall be corrected. Tell me, my dear, which is very straight. A, B, C, D. Yes, obviously, prior period error should be corrected retrospectively. Entry has a choice, no choice. Prospectively and disclosure, wrong. Prospectively, wrong. Obviously, correct. Then 11th bit. Ind AS 8 accounting policy changes in accounting estimations and errors shall be applied in. When are you supposed to apply? Change in accounting policy. Right. Selection and application of accounting policy. Accounting treatment in case of change in accounting policies. Both of the above. Tell me, Ind AS 8 name shall be applied in selection and applying the accounting policy, accounting treatment in case of change in accounting policies, both and none of this. Answer please. You can answer without doubt. Perfect. Obviously we discussed the starting of summary only. I told it talks about the selection, sorry, it talks about the, yeah, it talks about the selection, it talks about the accounting treatment. Correct. Na? Hierarchy it obviously is telling. Right. Go to 12th question. A company made some changes in accounting policies, accounted for them in the financial year 2018-19. Okay, nice. Right. Due to the change in accounting policy, retrospective adjustment has a tax effect related to the prior period. Correct. Now, this is again repetition. Yes, because we told this already answered. According to Ind AS 8, adjustment in the carrying amount of an asset or liability resulting from the new information or new development is to be treated. Tell me, my dear, what is it? Strike. I'm changing the carrying amount of asset or liability because I got to know new information. I got to know there is a new development. Hmm. Is it a change in accounting policy or is it change in accounting estimation? Yeah, obviously that is a change in accounting estimation. Perfectly you answer. Right. 14. Applying a new accounting policy to the transaction other events as if that policy had always been applied is considered as. This is already repeated. Correct. Now, isn't it retrospective application, my dear? Yes. Retrospective application. Not restatement. It is retrospective application. Yeah. I will erase this. Yes. Go with the 15th one. Yeah. 15th one bolo yaar. Um, 15th. The selection application of a similar transaction, other events and conditions shall be. This is also repeated, no? Correct, no? Yes. An entity shall change accounting policy only if. Yes, you can answer. Then can I change the accounting policy? We discussed, no, there are two reasons. One is the change in index. The other one is for the better presentation. Correct, na? It will lead to a better relevant presentation. Comparatively last year, say current year, my presentation will be much better. Then it makes sense. You are supposed to do it. Otherwise, should not do it. Not because of new information, new development. New information, new development, my dear. Correct, na? No, it is obviously not. That is with respect to change in estimation, my dear. So this is only A. Correct. Which of the following is not a is not a voluntary change in accounting policy? Tell me, it is not a voluntary change. Voluntary change means for better presentation. Answer. Which of the following is not a voluntary change in accounting policy? Early application of Ind AS. An entity chooses to change an accounting policy following an amendment of the pronouncement of IASB in accordance with paragraph 12 of Ind AS. Correct? Both A and B are voluntarily change in accounting policy. Both A and B are not voluntarily change in accounting policy. Yes. So B bit related, I have given the very good explanation with respect to that. Correct, na? Where you don't have, I'm explaining only B, I'm not concluding the answer. Okay, suppose I don't have an accounting policy. It is not discussed in the Ind AS or IFRS, may not discussed. So as I told you, then you should look for the any relevant Ind AS on the similar topics you have to search for. Nothing there, sir. Alright, can you look at least asset and liability concept recognition and criteria? No, sir, not able to do it. Then we prepared some concept, correct? By based on the IASB pronouncement or something, we created a new policy. Okay, you created a new policy which is not as per the Ind AS because in Ind AS there is no guidance. You create a policy, you are welcome. I am not saying. Okay, and this your policy is based on what? Your policy is based on the Ind AS. IASB have given some instructions accordingly. You made it. Welcome, you follow. Subsequently, IASB modified their initial pronouncement what they gave. No, that is amended. That is amended. Then you are finding, yeah, amended wala is looking good. So let me follow this. Yeah, why not? You can obviously follow that. So when you are following now, this amounts to what? This does not amount to voluntary. This does not amount to require change as per the, what should I say? Change as per the Ind AS. No, it doesn't amount to as per the Ind AS because it was that concept was not coming from the Ind AS itself. Okay, it is not a what do you call? It is not as a requirement of standard. It is asking you to do it. Right. This point we had a discussion. Right. Answer, my dear. 17th bit. Hmm? Question is what? Which of the following is not a voluntary change? Yeah, this is a voluntary change. You are changing it. This is not as per the India's change. This is a voluntary change. But question what is he asking? Which is not a voluntary is asking. Correct na? I mean to say this is voluntary, which we have discussed. If you remember this concept in the classroom discussion, then you will not find it. Obviously, my dear, A is the right answer. Early adoption in days, that is your choice. Your choice. You wanted to follow. Follow. Which ones are means suppose some amendment has come. Okay, yeah. It is one amendment. What is amendment? Amendment to Ind AS has come. Okay. But what you felt actually it is effective from 1/4/2025. Not a problem. But you can take it early adoption. You can no, I wanted to apply this Ind AS in the beginning. Yes, otherwise new Ind AS has come. No, many people with respect to Ind AS 115, with respect to Ind AS 116, they said it is effective from 2018 or 2019, something like that. Some companies have applied 1 year before only. Why headache? Let us follow from the current year itself. This is not a voluntary. This is also not a discussion. Not a voluntary change. He's asking not a voluntary change. Yeah, that will be falling under. Have you got it, or have I confused you? He's asking which is not a voluntary, and this whatever I told you, this is voluntary. This is voluntary, and this is not voluntary change because I just took a decision. Let me start following from the beginning. It is not a change. I wanted to do it. Okay, right. 18th bit. Which of the following shall be considered as a change in accounting policy? This is repetition again. Correct, na? Yeah. 19th. When an entity shall apply the change in accounting policy retrospectively, yes, please. You go through, I think you will be able to answer 19th bit. 19th bit answer, please. Okay. B, D, two answers came. When an entity shall apply the change in accounting policy retrospectively upon initial adoption of the Ind AS, that includes specific transitional provisions applying to that change. Initial application of Ind AS. Okay, 1 second. Changes in the accounting policy voluntarily. If there is a change in voluntarily, if you change it, that is not requirement of as per Ind AS. This then you are supposed to go over retrospectively mandatorily. You don't have a choice. Change in accounting policy due to early adoption. Yeah, due to early adoption, if you go, that is also voluntary change only. But yes, you wanted to follow early. You wanted to follow early, correct? Na? Yeah, you wanted to follow early. When you want to follow early, you will be listening to the Ind AS. Whenever there is a change as per the Ind AS, in the specific Ind AS, they will tell very clearly if you adopt or if you early adopt, how are you supposed to go with? Okay, are you supposed to go retrospectively? Are not required only from now onwards you should follow it? Or no, don't go to all the years. Na? Only last year, current year only you apply. Like that, very clear guidance will be given if there is a change in the Ind AS. Okay, under that circumstance, it is not necessarily all the times retrospectively. Okay, so I find only one circumstance, not other circumstance. What is that I told you, my dear? Yeah, change in the E circumstance B. I feel yes, correct. I am correct only. B is only right answer. Change in accounting policy voluntarily. Yes. Initial application of Ind AS means these two things are as required by Ind AS. Yeah, and the criteria and how to account for is very clearly given by the Ind AS. You don't need to follow retrospectively all the time. If there is no information given how to adapt, initially adapt or something, then you are supposed to go by that. I mean, retrospectively. That is what in the summary also we have discussed that. Yes, 20th. According to Ind AS 8, when change in accounting policy is applied retrospectively, okay, the entity shall adjust. What are you supposed to adjust? We spoke. This is also again repetitive. Okay, right. Now, some of the new standards amendment have been issued. This is also repetition, my dear. Yes. According to Ind AS 8, when there is a voluntary change in the accounting policy has an effect on the current period or any prior period would have an effect on that period except that is impracticable to determine the amount of adjustment might have an effect on the future periods, entity shall not be required to disclose what you don't need to disclose. Yes, go through answers, please. Given, read the question carefully. Voluntary change in accounting policy. We are doing. Normally, you are supposed to go by retrospectively only. If there is a voluntary change, retrospective is the only option. There is no other option. It has an effect on the current period or in the prior period. Would have an effect on that period except that it is impracticable to determine the amount of the adjustment or might have an effect on the future period as well. The entity shall not require to disclose. Okay, what you don't need to disclose? D is Nathaniel. Okay, Nathaniel is giving answer D. Is that for the current one only? Must be. Okay, first, are you supposed to give the nature of account which is not required to be disclosed? Not is there, correct na? Which you don't need to disclose. First one, nature of change in accounting policy you have to give because it's a voluntary change, correct na? Voluntary change means what you are changing. It is not as per the India. It's not those are that everybody knows. You have to give the change in nature of the change. Two, adjustment of the basic and diluted earnings per share. Yes, obviously. When you are retrospective change means automatically correct na, as if the changes happened from the beginning. You have to consider the tax effect. You have to consider the 33 that which is nothing but EPS effect. Everything you are supposed to consider. You don't have a choice. C. Reasons why applying the new policy. Voluntary change means what? Which is increasing my reliability, relevancy. Correct na basically. What is the reason, purpose? Obviously, you are supposed to do. Description of the transitional provision. Why you wanted transitional provisions are not relevant? No. Is it as per the standard? Are you changing? Are you changing voluntarily? Your question itself change says what voluntary change. That's why this is wrong. Wrong only is asking the correct. No, that's why D is the right answer. Right? 23. Next, which of the following items are examples of change in accounting? Which are the examples of change in accounting estimations? Yes, change in accounting estimation. Tell me, my dear. Warranty obligation. Yes, warranty is a change in estimation. Useful lives, change in estimation. Expected pattern of consumption of future economic benefit. That is nothing but depreciation policy. Change. Provision for doubtful debts. Change. So, obviously, C is the right answer. Correct? C is the right answer. Then look at 24. The effect of change in accounting estimation shall be recognized. Yes, my dear. Very simple and straight. Effect should be given what? Prospectively. Yes, it should be there in the only prospective but not retrospective. By including it in the profit and loss in the period of change. No, it is not in the, yeah, in the period of change. No, no, 1 second. You said B, no? Prospective by including the profit or loss of the future period. No, 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 not future period. In the year of in which it changed. Prospectively, you are supposed to apply correct na? Prospectively you are supposed to apply. Yes, one second. Prospectively by including it in the profit and loss in the period of change, that is without doubt correct. Second bit is what? Prospectively by including it in the profit and loss of the future period. I didn't get exactly what they mean by future period. Retrospectively is wrong. No, prospectively by including in the previous, in the preamble. Okay, from now onwards, your see concept of this is equal to, correct na? Sorry, I didn't get you. Netanya B. Oh, 24th I missed out, huh? Fine, not a problem. I'll come back. Yeah, 25th, let us clear it. The effect of change in accounting estimation. See, the first one is correct without doubt. Second one, I have a doubt whether what do they mean by, I'm not understanding exactly. Okay, yeah, if they say I have to consider from now onwards in the future, no, then the answer is right. Otherwise, the answer is not correct. Okay, so the answer will be either A or it will be D. D means A and B. First one is pakka correct, that's why A has to be there. Done. Let's come to 24th, as I missed out. Change in the method of depreciation shall be accounted as per in accordance with. Yes, it is a change in estimation. Just now we spoke, no? Correct, na? Yeah, expected. This is method of depreciation only. Change in estimation. Perfect. Yeah. So 26th one. Are the following statements in relation to change in accounting estimation true or false? According to Ind AS 8. Change in accounting estimations are accounted for retrospectively. Tell me, true or false? TRF you type. Change in accounting estimations are accounted for retrospectively. Now, change in accounting estimations are not accounted for retrospectively. Estimations are always prospectively. So this is false. So false, only these two are there. Out of these two, any one will be correct. Correct. Now, change in accounting estimations result from the new information or new development. Yes, that is true. So the correct answer is going to be B. Correct? Exactly. Right. So 27th. According to Ind AS 8, if estimating the amount of effect in the future period due to change in accounting estimation is not practicable. Yeah, sometimes it may be correct. Na? Information is changing. What will be the impact of the future years? Current year impact, obviously, I will give. There is no problem. Future year, if it becomes impracticable, what are you supposed to do? What are you supposed to do, my dear? Hmm? It is not. It is impracticable to future impact. I'm correct, na? Yeah. So read the information. They are only telling I'm not able to calculate. I'm not able to calculate because of some impracticable reasons. That is not my discussion. Correct, na? I'm not able to calculate. What are you supposed to do? Answer. Disclose that no concept of we can't change the impracticability concept only. Correct, na? Effect of you, right? Second bit, disclose the fact. This is yes, obviously when you can't do it all the time. Yes, you are supposed to disclose the fact and reason obviously for the same. Why you are not able to disclose it, right? So the second next C and D are illogical answers. Forget about it. According to Ind AS 8, prior period errors shall be corrected. How are you going to correct, my dear? 28th. Prospectively is wrong answer. Correct now. Prospectively is wrong answer. Entity has a choice. Choice no answer. Obviously, B is the right answer. Retrospective restatement, you are supposed to do it. Correct. Next. Let's go by 29th. Yes. In some cases, it is difficult to distinguish between a change in estimation and change in accounting policy, which is repetition. Correct na? We have to consider everything as a change in accounting estimation. Then, so go with the 30th sum. Yes, my dear. थोड़ा big है पढ़ो. B Limited, B India Limited has purchased an equipment on 1st April 2019. Okay. The company is following the cost model for such class of asset for measuring basis. Not a problem. Cost model. On 1st April 2021, that is after 2 years, CFO of the company advised the change in the measurement base from cost model to revaluation model. Not a problem, you can change it. Further, on 1st April 2022, due to some unavoidable circumstances, CFO of the company, post discussion with the management, advised the change again from the revaluation model to cost model. Okay, that is after 1 year he again went back. Not a problem. How the company dealt such changes in the 1st April 2021 and 1st April 2022. Yes, my dear, which standard are you supposed to apply? Are you going to follow only Ind AS 8 for first year and second year? Applying Ind AS 8 and 10 for both the years? Ind AS 16 for 1 year, 18 for another year? And correct, na? Yeah. So read it, what are the options they are giving. First and foremost thing, cost model to revaluation model amounts to change in accounting policy. It is not an accounting estimation. Correct? Huh? Right. Think about the options given. CY, BY. See, first of all, it is with respect to Ind AS 10 is prior, I mean, events occurring after the balance sheet date. Correct, na? Yeah, right. There is nothing like events occurring after the balance sheet date. Then why he linked Ind AS 10 here and Ind AS 10 here? That is, both the things are not correct. Agree. Right. And next, if you apply only Ind AS 8 is the one which will tell you, hey boss, this is a change in accounting policy. You are supposed to go with a retrospective application. That's all we told. But retrospective application you will go and you are supposed to recalculate the depreciation, recalculate the book value, and so many again revaluation is supposed to be done. How do you do revaluation and etc. As per Ind AS 16, that will not be taught in the Ind AS 8. So that's the reason C is the right answer. Okay, right. Yes, anyhow you people told perfectly. Right, 31st. Which of the following is treated as a change in accounting policy in accordance with Ind AS 8? Yeah, this is again repetition. Correct, na? Functional currency and all we spoke. Which of the following statements may not be correct as per Ind AS 8? May not be correct. Just very quick. Nothing is there in this. May not be correct. Change in accounting policy always requires retrospective statement. Not correct. Always word is not correct. Change in accounting policy, if it is because of the Ind AS, you are supposed to follow transitional provisions. Correct, na? Right. Next, change in accounting estimation requires prospective application. This is correct. Correction of error should be retrospective restatement. Correct. For retrospective application, it is required to the extent it is required to the extent not impracticable to do so. For retrospective application, the lines sometimes we did a mistake. Okay, right. Retrospective application is not required. Not required to the extent it is impracticable to do so. If I write it here, not, it is not required. Okay, not required. Right, this is a correction I am doing. Right, under that circumstance, first one is which is not correct. Which is not correct means what is that? Accounting policy change will require always. No, not always. Why not always? I told you na. If it is as per if you are changing as per Ind AS requirement, then you are supposed to follow. You are supposed to follow transitional provisions rather than the accounting. Ind AS ka retrospective application is not required. Next, which of the following is a change in accounting policy? Tell me, my dear. Method of inventory valuation. Yes, it is a policy change. Method appreciation. No. Reporting value of cost. Change in the reporting value of PPE from cost to fair value. It is also change in accounting policy. Change in the useful life of the asset. No. Actually, they have to give, I mean, you should write one either B or B. These both the things are correct, my dear. A answer also correct, C answer also correct. Because cost model to revaluation model. I mean to say fair value model he told actually this is not very clear. If they had written like this, cost model, correct now, cost model to revaluation model, then C bit also correct. Okay, right. So actually speaking, indirect sentence is not that great, but otherwise method of inventory valuation from FIFO, weighted average, standard cost and retail cost, all those things are also accounting policy change only. Yes, 34. We are left with hardly 5 6 more questions. Let's clear it. Which of the following are change in accounting estimations and change in accounting policy? Okay, we are supposed to give the choice, right? You answer one by one. The change from FIFO method to weighted average method. What is it? Just now I spoke. This is a change in accounting policy. Correct. Accounting policy. Yes, AP will write. X. An entity reverse the provision of the doubtful debts during the financial year as related. This is an accounting estimation. Yes, AE. Right. An entity changes the method of depreciation from straight line to WDV method. Accounting estimation. Yes, correct. An entity has classified an investment property, a owner occupied investment previously classified as part of property and equipment, which was measured as initial recognition revaluation model. In India's 40 an investment property permits only cost model. The entity now remeasures this. Tell me, is it accounting policy changer? I am not changing. Correct na? This is not accounting, but this is also exception to the basic rule. Yeah, investment property as per Ind AS 40. You are supposed to follow only what, my dear? Cost model you are supposed to follow. Correct na? Right. So cost model you are supposed to follow. Now, as part of the property where it was measured after the initial recognition, okay, previously classified, one second. An entity has classified the investment property, a owner occupied property previously clarified as a PPE where it was measured. Correct. Now, say example, earlier they were following revaluation model, but now if you are classifying it as Ind AS 40, that is investment property, then you are supposed to change it. But this change is not because of my vision will. That's why this is also not an accounting. No, it is not going to be done retrospectively. That's all. This is the answers. Okay, right. Change in accounting policy should be applied. We already told, correct now. Retrospectively in general, but not the straight answer is not exactly. If it is as required by Ind AS transitional provisions, if it is a voluntary change, then it is correct now retrospectively mandatorily. Or if there is no Ind AS transitional provisions, then retrospectively you are supposed to do it. But if they ask something like this, no change in accounting policy, like a plain question, then you go by a retrospective accounting. Error should be corrected. Yes, you people retrospectively you are supposed to restate it. Yes, you need to refinance your long-term loan. Refinancing long-term loan. Your end of the reporting date is March. You sign the report in the April. I mean, refinancing is done in the April month. Approve your financial statements in the month of May. The long-term loan is showed as. Tell me, it's linked between Ind AS 10 and Ind AS 8. You need to refinance your long-term loan. Balance sheet date is 31st March. You signed the refinancing in the April month. Yeah, you're going by the April, I mean, refinancing April month. Right. That is a purely a new transaction. It is not a situation or something. Correct. Na? See, very simple. Yeah. Suppose you have taken a 3 years of loan. Loan is there till example. What is the closure date of loan? That is 14. This is 2024. Correct. Yeah. So 15th April. So where are you? Sir, I am on 31st March 2024. Have you correct now? Have you gone for the extension of the loan? No. Extension of the loan is not happened. Refinancing means again going back again. So here, have you signed it today? No. This is not with respect to Ind AS 10 where there is a what do you say, covenants are there which you have not satisfied the covenants. No, this is nothing to do with the covenants and nothing to do with that concept. Correct na? So 3 years are getting over. So right, you signed a new agreement that is for 15th 4 or 16th 4. That is in April month May you signed it. So that is as on 31st March. It is supposed to be a current liability. Let me check. Yes, I'm right. As on 31st March, it is a current liability. This is not exception to the carve out. There is no covenant. What is that? Covenants have been, I mean, not followed or defaulted. Something is there exactly. It's a current liability without any doubt. Okay, right? Suppose if this guy has refinanced it in, right, correct now, this refinancing has happened before 31st March, then it is long term liability depending upon the period of refinancing. Okay, right. Then when it is difficult to distinguish between the change in accounting estimation accounting policy, which we already told, repeated, this amounts to change in accounting estimation, correct na? Error includes, tell me my dear, error includes mathematical error, perfect. Mistakes in application of accounting policy, perfect. Oversights are correct na? Yes, perfect. Fraud, yes. Change in the provisions for, correct na? Change in the provision for bad debts are alternative, that is not an error, no. Provision for bad debt is what? Change in the estimation, correct? Basically change in estimation. So what is correct answer, my dear? 1 to 4 is the right answer, correct? Now all these four are change errors without doubt. Change in accounting policy which does not result from the initial application of the international standard must normally be accounted for retrospectively. International accounting standard are right in days, basically, correct na? It is not correct. Retrospectively you are supposed to follow. Yes, my dear. Yeah, last bit. So in selecting the accounting policy, you should review. What are you supposed to review? Hmm? Standards you should review. Yes. Interpretations are you supposed to review? Yes. And the framework also are you supposed to review? Yes. Correct. Now everything you are supposed to review. That's why D is the right answer. Okay. Yes, my dear. Do you have any questions in Index 8? I mean, specific question if you have, yes, you feel free to ask.